People in the crypto world are shocked right now because Claver just said something that sounds almost unbelievable. He said that one day all the money will run through the XRP ledger. When you hear a statement like that, it almost feels like hype, but when you start looking deeper into what is happening behind the scenes, especially with Ripple, XRPL, RLUSD, and new institutional tools like Ripple Prime, you start to understand that this statement might not be as crazy as it sounds. So, welcome back to BullionIQ, your trusted place for simple but powerful explanations about crypto, blockchain, and the future of financial technology. Today, I'll break everything down for you step by step, so even if you're new, you'll understand exactly what is happening and why this could be one of the most important developments for XRP in years. Before we get into the all the money discussion, let's start with what is happening right now. XRP and RLUSD are about to move across XRPL, EVM sidechain, and Solana starting this December. The final security audit is underway, and once that is complete, Axelar will open the bridge. This means that XRP and RLUSD will be able to move directly into Solana's massive ecosystem with one click. And this is not a small thing. Solana is one of the most liquid, high-volume ecosystems in crypto. Connecting XRPL to Solana means opening XRP to a huge DeFi, trading, and liquidity environment that earlier was not accessible in such a smooth way. This alone is a major interoperability step. If you want real adoption, real volume, and real-world usage, you need to go cross-chain. And now that Axelar is connecting XRP and RLUSD to not just one chain, but dozens of chains, this creates a very powerful story for Ripple when talking to banks, payment companies, and institutions. Instead of building separate systems for every blockchain, which takes time and cost, they can now integrate once with XRPL and reach many chains automatically. This is exactly what institutions want: low cost, high speed, and zero technical headache. Now let's talk about the all the money meme, because a lot of people misunderstand it. When Claver says all the money will run through the XRP ledger, he does not literally mean every dollar or every euro will depend only on XRPL. What this actually means is that XRP Ledger could become the financial plumbing behind the scenes for global value transfers. Just like most websites run on protocols you don't see, most financial flows could one day rely on XRPL without the average user ever knowing it. From cross-border payments to CBDCs to stablecoins to tokenized assets to RLUSD and even DeFi settlements, XRPL could act as the invisible layer that moves value instantly. This interpretation is realistic because Ripple is building exactly this type of system, a universal settlement layer that connects banks, fintechs, treasuries, stablecoin issuers, and tokenized assets. When Brad Garlinghouse talked about all the money years ago, people laughed. But now with the EVM sidechain, with RLUSD, with Axelar integration, with Ripple Prime, with Treasury, with bank charter applications, with ETF proposals, and with institutional interest rising almost daily, the concept doesn't look unrealistic anymore. It looks like a roadmap. People ask why XRP's price has not moved yet. And here's the honest answer. Most of the buying is happening on OTC desks. Institutions are not buying retail supply. They are buying behind the scenes. That is why you do not see price impact yet. But OTC supply is limited. Once that supply is gone, the only place left will be the open market. And that is when real price action begins. This is exactly why the coming months are critical, because Ripple's decisions about escrow, supply management, and Ripple Prime will directly impact XRP's future price. If you really want to understand why this Axelar integration and cross-chain movement of XRP and RLUSD matters, you need to zoom out for a moment and look at how fragmented liquidity has become across modern blockchain ecosystems. Every chain has its own pockets of liquidity, its own DeFi apps, its own stablecoins, and its own liquidity providers. This fragmentation makes value transfers slow, complicated, and expensive, especially for institutions that need reliability and scale. Now imagine plugging the XRP Ledger, a system already built for high-speed settlement, deep liquidity pathways, and institutional-grade reliability, directly into ecosystems like Solana, which is known for extremely high throughput and massive retail liquidity. When Claver says all the money will run through the XRPL, he is referring to exactly this kind of future where XRPL becomes the neutral fabric connecting everything together. It doesn't mean every dollar will physically live on XRPL, but it means XRPL becomes the routing layer, the settlement core, and the underlying structure that lets value move between banks, chains, stablecoins, tokenized assets, and global markets without friction. And that vision becomes clearer now that XRP and RLUSD can move across XRPL, the XRPL EVM sidechain, and Solana with one-click routing through Axelar and Squid. When you think about how powerful this is, consider the biggest pain point in global finance: liquidity. Banks spend billions keeping capital locked in nostro accounts. Corporations lose millions every year waiting for payments to settle. DeFi users lose efficiency by hopping between chains and bridges that aren't always secure. What Ripple is building with RLUSD, XRP, the EVM sidechain, Axelar, and now with the integration into Solana, is a liquidity machine that operates across all major ecosystems. Stablecoins like RLUSD can be used on-chain, off-chain, and cross-chain without building separate infrastructure for each destination. Banks want one integration that plugs them into every chain, every asset, and every liquidity pool. That's exactly what Ripple is positioning itself to deliver. And that's the reason institutions are quietly paying attention, even if retail markets are distracted. Ripple is building the rails, and XRP is the settlement token that makes it all run smoothly underneath. Many people misunderstand the role of XRP in this system. They expect massive burn or deflation, but XRP's value proposition is not based on burn scarcity. It is based on utility, liquidity, and settlement efficiency. Even if every transaction on Earth ran through the XRPL, only a few tens of millions of XRP would be burned per year, which is basically nothing compared to the total supply. The real value comes from XRP being the bridge asset. It becomes the asset that connects dollars, euros, yen, CBDCs, tokenized bonds, stablecoins, NFTs, and corporate settlements. It becomes the asset institutions use behind the scenes when they don't want to keep balances in dozens of different currencies. And because XRP moves fast, settles instantly, and doesn't require pre-funding, it solves the biggest problem in cross-border money movement, capital inefficiency. This is why Ripple is integrating every major ecosystem into one connected framework, because liquidity cannot stay isolated forever. The world is moving toward instant settlement, 24/7 banking and tokenized assets. Someone has to provide the neutral layer that connects everything. Ripple wants XRPL to be that layer. Now let's connect this vision with Ripple Prime. As OTC desks run low on XRP supply, institutions need a regulated, compliant, and trustworthy way to access large amounts of XRP. Ripple Prime is simply the modern version of Ripple's old OTC system, but with better transparency and aligned with current regulations. It allows major institutions to acquire XRP without moving markets violently. Whether people like it or not, institutions are buying XRP. The spot ETFs have already shown hundreds of millions in demand, and almost all of that buying is happening off exchange. That means the public isn't seeing the true pressure yet. Once OTC sources dry up, institutions will be forced to buy from Ripple or the open market. That is when supply dynamics shift. The only question is how Ripple releases Escrow moving forward, because that will determine how aggressively XRP's supply tightens. For now, all signs point toward Ripple preparing for a multi-chain liquidity era where XRP is deeply embedded into institutional workflows, banking systems, cross-chain DeFi, and tokenized markets. And if that vision continues to unfold, the phrase "all the money" suddenly doesn't sound so exaggerated anymore. Many people focus only on price, but the real story is happening in the structure of global finance. Right now, the world is shifting from slow, centralized systems to fast, interoperable networks. Banks, governments, corporations, and fintech companies are all realizing that they cannot continue operating on outdated rails. This is why tokenization is exploding. Everything is being prepared for digital form: bonds, treasuries, commodities, real estate, carbon credits, CBDCs, and stablecoins. But tokenization has one big problem. Value can be created on-chain, but it cannot move efficiently between chains or between the digital world and the real world. This is where Ripple quietly positioned XRP Ledger as the neutral highway that connects tokenized assets, fiat currencies, and blockchain ecosystems. And every new integration, whether it is Axelar, Solana, or the XRPL EVM sidechain, makes this highway bigger and more attractive for institutions. If you look at Ripple's strategy, you will see something very interesting. They are not trying to compete with blockchains like Solana, Ethereum, or Avalanche. They are connecting them. They are turning XRPL into a settlement core that other ecosystems rely on. Institutions don't want to build on 20 different blockchains. They want one settlement layer that plugs into all of them. And this is exactly why Ripple invested in connecting XRPL to EVM networks, because institutions already live in the Ethereum environment. With the new sidechain, they can bring their existing smart contracts, tokenized assets, lending pools, treasury tools, and compliance systems directly onto XRPL without rebuilding anything. This reduces friction and increases adoption. And every asset that enters XRPL becomes part of a broader liquidity system where XRP is the bridge asset that enables instant value routing. Another major factor that people ignore is the role of liquidity hubs. Solana has massive liquidity. Ethereum has massive liquidity. But XRPL has something neither of them have: institutional-grade settlement optimized for cross-border value flows. When you connect all three, you create a liquidity super network. And this is exactly what the Axelar integration unlocks. Once XRP and RLUSD can move freely between these networks, you will have cross-chain stablecoin markets, cross-chain lending, cross-chain swaps, and cross-chain settlements. Traders will route value using whichever network offers the best prices. Liquidity will not stay locked on one chain anymore. It will flow to the most efficient path. And because XRPL offers near zero settlement cost, it has a natural advantage as a routing layer. People don't realize how powerful this is. Once liquidity starts moving through XRPL, XRP becomes the settlement token that enables this flow. That means demand for XRP increases naturally, not through hype, but through usage. Now, let's address a very important question. Why is Ripple preparing all of this before price takes off? The answer is simple. Institutions don't want price chaos. They want infrastructure first, liquidity second, and speculation last. Retail wants price first. Institutions want order first. Ripple knows this. They're building the pipes before opening the water. And this brings us back to the idea that OTC supply is running low. If true, this is the most important signal yet. Institutions always buy quietly before a major shift. They accumulate while retail is distracted. Once the infrastructure is ready, once liquidity connections are stable, once the regulatory picture becomes clearer, then the real movement begins. Every major bull cycle in crypto has followed the same pattern: infrastructure, quiet accumulation, supply tightening, then explosive price movement. And this time, XRP is entering the most critical phase of its life. It is no longer a lawsuit story, no longer a speculation token, no longer stuck in isolation. It is becoming the backbone of a multi-chain financial network where stablecoins, tokenized assets, CBDCs, DeFi protocols, and institutional systems can all meet in one place. And if that vision continues to align with global financial needs, then XRP's role will grow far beyond price charts and into the core of global settlement architecture. This is why the idea of all the money no longer sounds like a meme. It sounds like a direction. Now let's dive deeper into how XRP's supply dynamics and institutional demand are quietly shaping the market. One thing many people overlook is that even if public exchanges show normal trading activity, the real action is happening behind the scenes in OTC desks and Ripple Prime. When these private liquidity sources start to tighten, it creates a subtle supply shortage. This doesn't mean XRP disappears, but it does mean that every transaction, every buy, and every sell carries more weight. Whales and institutions start buying strategically, slowly absorbing available supply, and this can influence price without being obvious on charts. Retail traders often miss this because they are only watching public markets. This is why Jay Claver's comment about all the money running through the XRP ledger resonates. The money is moving quietly, efficiently, and in large volumes, often unseen by the average investor. Liquidity plays a key role here. Solana, Ethereum, and other high-volume chains are full of trading activity, but they often lack the settlement speed and efficiency that XRPL offers. When XRP becomes the bridge asset connecting these ecosystems, liquidity starts to flow differently. XRP doesn't just act as a token. It becomes the medium that enables cross-chain swaps, stablecoin movement, DeFi lending, and institutional settlements. This is a game changer because institutions want reliability, speed, and predictability, not volatility or delays. XRP's ledger can handle high-speed settlement, which means that even if billions of dollars move through it, the process is almost instantaneous. That level of efficiency creates demand, which quietly strengthens XRP's position as the preferred bridge asset. Now consider the effect of escrow management. Every month, a set amount of XRP is released from escrow. Ripple historically relocks most of it to avoid flooding the market. If they continue this disciplined approach, public supply remains tight relative to institutional demand. Even minor shifts in escrow policies can have a large impact on market sentiment. For example, if relocking slows or stops, billions of XRP could hit the open market, creating temporary oversupply. Conversely, careful management ensures that XRP maintains scarcity for high-demand use cases like settlement and cross-chain liquidity. Understanding this is critical for anyone who wants to see the real mechanics behind XRP's market behavior. Institutional adoption is another hidden force. Ripple Prime allows large institutions to acquire XRP in a controlled, compliant environment. Unlike retail, these institutions buy quietly in large blocks and for long-term operational use rather than short-term speculation. They don't panic sell. They integrate XRP into treasury operations, cross-border payments, or tokenized asset platforms. Meanwhile, retail may perceive low activity on exchanges and assume nothing significant is happening. This is why XRP's apparent price stability can be misleading. The infrastructure is building quietly, creating future demand that may not yet be visible in charts. Finally, think about the combination of Axelar integration, Solana access, G-Treasury corporate adoption, and OTC supply management. Together, these elements form a powerful ecosystem where XRP is central. It's no longer just a speculative crypto token. It's evolving into the backbone of a multi-chain, multi-asset, institutional-grade liquidity network. All the money running through XRPL phrase may have started as a meme, but with these developments, it's slowly turning into a practical blueprint for the future. XRP is positioned to connect banks, treasuries, DeFi platforms, and tokenized assets in a seamless global network. That's why following institutional flows, escrow releases, and cross-chain integrations is more important than watching daily price movements. It reveals the real story behind XRP's adoption and market potential. Another important piece of this puzzle is Ripple Prime. Many people do not realize how much Ripple is quietly preparing for institutional demand. Ripple Prime is essentially a new OTC platform designed for institutions to acquire XRP without impacting public markets. Unlike the old OTC model, which sold XRP directly to counterparties at discounted rates, Ripple Prime is fully regulated, fully institutional focused, and designed to handle massive volumes safely. This is critical because we have seen a surge in ETF interest, billions of dollars worth, and the public markets cannot supply that alone without creating volatility. Ripple Prime becomes the bridge between institutional demand and the broader XRP ecosystem, ensuring that adoption can scale without dramatic price swings. It is also fully integrated with Ripple's compliance framework, which makes regulators comfortable and institutions confident. In the next few months, we could see Ripple Prime quietly channeling hundreds of millions of XRP to major banks and corporations. To the public, this looks invisible, but it is exactly what prepares XRP for the next phase of growth. It's like building the plumbing before you turn on the water. Once everything is connected, XRPL, EVM sidechain, Axelar, Solana, Ripple Prime, the faucet opens and liquidity flows everywhere. Let's also talk about Escrow. XRP's supply management is something the market often misunderstands. Ripple controls a certain portion of XRP in escrow, which is released monthly. Historically, 1 billion XRP would unlock each month, and most of it would be relocked, roughly 70 to 80%, to prevent flooding the market. Now, if Ripple decides to maintain this discipline and release only what's necessary to meet institutional demand, the market remains tight. But if relocking slows or stops, suddenly billions of XRP could enter the public market. That is why paying attention to escrow activity is just as important as following price charts. Supply matters as much as demand, and Ripple's decisions directly affect this balance. For investors, understanding escrow and OTC activity is crucial because that is where the real market mechanics happen, not on Twitter or YouTube comments. Another aspect often overlooked is G-Treasury integration. Ripple acquired G-Treasury to bring real-time blockchain liquidity into corporate treasury operations. Large corporations and banks often have idle balances trapped in nostro accounts, unable to generate yield or be redeployed efficiently. By embedding blockchain rails, Ripple enables these institutions to move, settle, and earn on capital almost instantly, 24/7, 365 days a year. This reduces risk, lowers FX exposure, frees trapped liquidity, and allows treasurers to earn yield or pay down debt instead of letting cash sit idle. Essentially, Ripple is giving corporations superpowers with money that was previously just sitting there. And when corporations use XRP as the settlement asset in these systems, it increases utility, volume, and ultimately demand, quietly, without retail ever noticing. This is why institutions will continue to stack XRP even before the public sees price movement. They are preparing for long-term efficiency, not short-term speculation. Finally, the combination of OTC activity, escrow management, Ripple Prime, and G-Treasury adoption creates a scenario where XRP becomes indispensable. Even if retail traders don't fully understand what is happening, the institutional demand is real, and the underlying infrastructure Ripple is building ensures it can scale globally. When you combine this with upcoming ETF activity, cross-chain integration with Solana and other networks, RLUSD adoption, and regulatory clarity, XRP is not just another crypto token. It is slowly becoming a core liquidity hub for cross-border payments, tokenized assets, and institutional settlements. The phrase, all the money running through XRPL, may sound like a meme today, but with all of these pieces coming together, it is slowly evolving into a realistic blueprint for the future of global finance, for institutions, and for you as an investor. When you connect the dots, Axelar's cross-chain integration, the XRPL EVM sidechain, Solana liquidity, Ripple Prime OTC platform, escrow management, G-Treasury corporate adoption, and regulatory clarity, you start to see a complete ecosystem forming. This is not random. Ripple is deliberately building a multi-layered infrastructure where XRP sits at the center as the bridge asset. Banks can settle in XRP, DeFi projects can borrow or lend it, corporations can manage treasury flows, and tokenized assets can move across chains instantly. All of this happens behind the scenes. Most users will never notice, but institutions will rely on XRP to move massive sums of money efficiently and safely. This is why Jay Claver's statement about all the money running through the XRP ledger is not just hype. It's a realistic description of what XRP is being positioned to do over the next few years. For retail investors, this has important implications. First, it explains why price hasn't yet exploded despite enormous demand. Institutional buying is happening quietly, mostly through OTC desks, Ripple Prime, and private liquidity channels. That means public supply is still relatively abundant, keeping volatility muted. But as these channels fill up and liquidity tightens, public markets will feel the pressure. This is when you could see sharper moves, both because demand has increased and because supply is managed carefully through escrow. Second, it highlights why understanding infrastructure matters more than chasing price spikes. XRP's real value comes from usage, not hype. The more banks, treasuries, and corporations adopt it for settlement and liquidity, the stronger its foundation. Price follows usage over time, not the other way around. The other critical piece is regulation. XRP is operating in a landscape where compliance matters. Ripple has already worked with regulators, received waivers, and is building platforms like Ripple Prime to ensure that institutional adoption can happen legally and safely. Regulatory clarity reduces risk, which encourages more institutions to adopt XRP, creating a positive feedback loop for liquidity, volume, and long-term stability. Compare this to other cryptocurrencies that are still struggling with compliance or are blocked from large-scale institutional use. XRP is moving ahead quietly but decisively. Lastly, Ripple's ecosystem strategy is creating competitive pressure across the financial world. Treasury integration alone is pushing other treasury management providers to modernize. Large banks and fintechs will have to upgrade their settlement processes, adopt stablecoin rails, or risk losing market share. XRPL, with its low-cost instant settlement and cross-chain interoperability, gives Ripple a first-mover advantage that is very difficult for competitors to replicate quickly. That means XRP is not just a token, it's a tool for real-world adoption in financial infrastructure. Its value proposition is tied to efficiency, scalability, and institutional confidence. So, when you combine all of this, the picture becomes clear. XRP is quietly transforming into a global settlement hub, and institutions are stacking quietly while the infrastructure matures. The all-the-money narrative isn't just a meme anymore. It's the blueprint for a future where cross-border payments, tokenized assets, DeFi, and corporate liquidity all flow through a unified network powered by XRP. For investors, the takeaway is simple. Focus on infrastructure, adoption, and supply dynamics. The price will reflect these fundamentals over time. Keep following BullionIQ for every update because as these pieces fall into place, the real story of XRP's adoption is just beginning.